Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, the 3 reasons you might be showing that you care more for the IRS than you do for your family. Now, I talk about that on Hidden Wealth Radio this weekend. I'm being a little facetious, but I see this regularly in our practice. And this was a really good article actually out of Kiplinger magazine. And the first one is you're ignoring the tax sale, the Tax Cut and Jobs Act, right, with the increase of taxes. And folks, the sale is on. Now, you've seen a lot of things transpire here that are manipulated, and clearly if we can throw a former president into prison, we can change tax. This administration's capable of changing tax rates at the flick of a switch. And I want to teach you what you can do to take advantage of the things that we can control, right? We have a lot of things that we can't control. Our Justice Department, right? Inflation, interest rates, drunken sailor spending. The only thing that's growing in our economy is big government. And then you've got a budget proposal by this Bidenomics bozo of $7.3 trillion of additional taxes. So he has said as much as soon as he takes office, if he's reelected, and let's pray he is not. But if that happens, which is conceivable, anything's possible now that we're witnessing what we're witnessing, right? The country has changed completely. Then he's going to sunset the Tax Cut and Jobs Act even sooner, which means everybody's taxes, not the Biden lie that only people that, make over $400,000. The deduction, right? The standard deduction is going to get cut in half. All the tax rates are going to go back up. And he said he would do that as soon as he took office, folks. Don't overpay taxes. That's number one. Number two, you're potentially going to create a big tax burden so that your surviving spouse has less income and pays higher taxes. Now, that's what we call the widow tax penalty. Now, here's where I really want to talk to you. If you don't have a decumulation, preservation, and distribution plan, distribution of legacy, distribution of avoiding your RMDs, not making sure 85% of your Social Security is not taxed, making sure your Medicare doesn't get hammered on your Part B and Part D of an extra $5,000 a year. I mean, we see these horror stories. Then you don't have a plan, folks. You have what's called an accumulation plan by one of the big box store brokerages that won't talk to you about taxes, because a number of you have told me they won't talk to you about taxes, even the ones that tout these great portfolios. Well, let me ask you a question. How great is a portfolio that is ballooning your future taxes? And to make that worse, because I see it regularly, right, because none of us are getting out of here alive, the surviving spouse now goes from a joint tax filing brackets to a single tax filer with the single filer brackets. And I want you to think about that balloons somebody's taxes incredibly. It's very unfortunate. It's what they call the widow tax penalty. Now, the third one, and last but not least, as they say, you're preparing to dump a highly taxable amount of money on your children, known as the inherited IRA. The ticking tax time bomb that the government forces you out of and then forces our children out of can be avoided. Now, here's the other thing I talk about at Hidden Wealth Radio this weekend is the unfortunate circumstance of this now budget proposal to pay for all this nonsense is proposing the highest capital gain tax rate in history of almost 45%, 44.6%, folks. Now, if you've got a business to sell, you've got a high appreciated stock portfolio, provided this administration doesn't ruin that. And at the same time, let's say maybe you've got a business to sell, or maybe you're divesting out of real estate, whether it's inheriting IRAs or what's called a transfer of basis, where it used to be our kids would inherit our assets like we've inherited our parents' assets. Remember, there's $90 trillion, the great wealth transfer. That's why the government and the IRS are licking their chops here, folks. That's why they're hiring more people, not just to find more tax, but to take more tax. And it used to be that you would then get the value at the time of that person's passing stepped up. We had a client I'll leave you with this weekend, that we met with this week, that the parents' home was worth $10,000. Originally, they paid $10,000, no exaggeration. She's now inherited that property from her father. The property is worth about $410,000. So today, she has inherited that value at $410,000. It got stepped up, so now they're selling. Her and her siblings are selling the property, and they will not pay capital gains. Under the new proposal, business, stock, real estate, it doesn't matter. Depending on the size of your gain, okay, or any gain, the transfer of basis, the value of what the parents paid, going back to our example of $10,000, and now the daughter and sons, right, of that family inherit that at $410,000. Not only do they have a capital gain of $400,000, but it's called an unrealized gain, meaning they don't even have to sell the asset, but because the government got signaled, right? And they have to report this on their taxes, right? That there's a $400,000 gain, whether they sell the property or not, they owe the tax on the $400,000 gain. And the tax can be as high as 44.6%. Folks, remove your wealth from Washington before Washington removes your wealth for you. Go to retirementprotected.com. That's retirementprotected.com. And let me teach you how to protect yourself. We know you don't want to show signs of liking the IRS more than your own family, but I see it regularly on a weekly basis, sometimes on a daily basis, and it's done inadvertently, but it can be controlled. Of all the things that we can't control in this country, with all the nonsense, what's right is wrong and wrong is right, take care of your taxes. You can do something about it. The taxes are on sale. Make sure you have planning that takes care of that surviving spouse. Just get rid of the taxes. Retirementprotected.com, retirementprotected.com.